right, welcome to Common Sense Investing. My name is Cameron, and I'm here to talk about microcap stocks because that's what I love to do. Earnings season is almost over. Q2 earnings season for most companies. Other companies that report at weird times are kind of, getting into the pack right now, but we're getting close to seeing most of our favorite companies finish up reporting for this Q2 season, and a few more to talk about today. So as usual, I'm going to have a presentation. I'm going to talk about a few of the stocks that I want to talk about, their earnings, a little bit of my opinion, and in the meantime, feel free to hit me up in the comments, chat, mention other stocks, because after my presentation, like always, I'll try to free up some time for some Q&A, and we'll talk about whatever stocks you want to talk about. Hello, welcome for joining me on a Monday evening talking about microcap stocks. So absolute wonderful place to be when things are going well, and they have been, at least recently in 2025. Things have been going pretty well for microcap stocks. I hope everybody's doing great. Hope everybody's had a fantastic summer, that you're making money in microcap stocks. That's really what I hope for everybody out there. Let's start off here with, I'm a planner, and especially in investing, because I know if I say that right now, my wife would laugh. Like, I don't really plan everything in my life, that's for sure. But when it comes to investing, I'm a big proponent, advocate of planning, right? A bad plan is better than no plan. I say that all the time. Where in microcap stocks, you have to be humble and you have to recognize you're going to be wrong a lot. It's getting those times when you're right, capitalizing on those times when you're right, that is really when you make money. And as far as having a bad plan better than no plan, typically what I advise to do is you make these plans. You make tons of plans. You build thesis after thesis after thesis after thesis on some of these stocks. Why you think it's a good investment, why you think it could be a bad investment, all the potential rewards, all the potential risks. We need to plan this stuff out. And then when you fail at that plan, when something goes wrong, unexpected, a change in that plan, you learn from that. You grow, you gain that experience, and then you make your next plan a little bit bigger. And over time, your plans just keep getting better and better and better and better. Combine that with more experience in microcap stocks, and that's really where the opportunity lies here for some investors. Now, one of the other things to talk about, though, is it's not just about being right, it's about being flexible. And I love this quote here because, one of the most important qualities of any plan is the flexibility to change, especially with microcap stocks. This is my slide. I talk about it all the time, and sometimes I take heat on it because, there's a lot of investors with different strategies out there. You do you. You do what works for you. I'm absolutely not arguing that. I'm actually quite a big fan of Chris Mayer's book, 100 Baggers, which talks about the whole coffee can portfolio, where basically you do your research up front, you figure out a good company, you buy that company, you buy shares of that company, and then you forget about it for 2 decades. And if you do that properly enough, then in 2 decades, you're going to open up your account, like pull it out of the ground like a time machine box. And, you're going to have some failures in there, but you're going to have some winners. And the winners are going to be up so much that you're just going to become rich. I like that for certain stocks. But for the most part, typically what I talk to people about is companies need to earn my money. So this is why I always talk about earnings seasons. That's why my last 3 live streams in a row have been talking about earnings season, because I tend to build a thesis around a stock. This is my plan. And then as inputs come in, I evaluate those inputs. Earnings is a huge input for microcap stocks, as are a lot of times news comes with earnings. These two things can go together. This is where I gather information. This is where I validate my plan, because that's kind of the next step, is evaluating the thesis. I built an original thesis. Did anything change for the good? Should I buy more of this stock? Did anything change for the bad? Should I sell some of this stock? Am I not sure? Do I want to de-risk? Maybe there's some confusion or something isn't perfect. Maybe I want to trim this stock. Typically, this goes against the whole buy a stock and hold it forever crowd, though. This is my own investing thesis. I built this slide from scratch. I'm actually pretty proud of it. But I do take some heat sometimes from the long-term investor crowd. I love, and I love pointing it out when other large investors agree with me, right? I have to point it out. I do. I can't let this slide. This was Ian Castle, August 24th, yesterday. I'm recording this August 25th. Investing in small stocks shouldn't be seen as a single bet or decision, but a series of bets and decisions. Love that analogy to poker, by the way, on bets and decisions, right? I do compare microcap investing to playing poker. Small businesses evolve very quickly in good and bad ways. In 3, 6, 12 months, the business might deserve more of your capital or none of it. Sure sounds like me, right? So I had to point this out as far as evaluating the inputs, evaluating the thesis at least every 3, 6, 12 months, and making that decision to buy, trim, sell, or hold. I don't have hold in there, but that's another option. I do love when other investors kind of validate my plan, that this is something that other people are doing. So thank you, Ian Castle. I really appreciate that right now. So I had to talk about that one. Another plan. This is more of my plan, and this is 80 to 90% of my plan, is basically evaluating stocks individually. And I tell people that all the time. Well, Cameron, how do you plan for a bear market? How do you plan for a bull market? I really don't. Basically, in a bear market, the inputs coming in are negative, 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 negative. And when you get that many negative inputs, eventually you evaluate the thesis. And in a bear market, that simply leads you to kind of your only options here, which are trim or sell. So that naturally I find like I am converting shares of companies into cash slowly over time in a bear market, simply because the thesis gets broken or changed to the negative, right? This is typically how I operate. But that doesn't mean I also don't make some macroeconomic higher level plans, right? And kind of my plan recently, as I've been talking about this, you know, you're not always going to be right, but I try to think strategically. I do love this Q2 earnings season in the summertime, because this is typically the lazy summer, right? This is an opportunity to buy stocks when people aren't really talking about them. It's not too exciting. You know, some people are on holidays, vacation. We're not close to Q4 or audited year-end numbers. We're still a ways away. People are still making decisions. So typically for me, this is kind of a good time to do my research and figure out what my best kind of companies are for the future. And where the future lies for me, again, we have Q3 coming up, October and November, as well as we have the fall investor conferences. Small Cap Discoveries in Vancouver, September 29th and 30th. I will be attending that in person. And then we have Planet Microcap in Toronto. I think it's October 21st to the 23rd. And I won't be there in person, but I'll be watching that virtually. And I mean, this is such a huge time for microcap stocks, the best ones, hopefully, to get some eyeballs on the stock, to get some attention. And then after that, we head back into tax season, about mid-November to about mid-December, where people have less money because they're spending money on Christmas gifts, as well as they're taking capital gains and capital losses. And then kind of the next kind of bull season for me that I'm looking for is Q4, full year earnings, audited earnings, especially for microcap stocks. That's when really larger investors and institutions can build trust in some of these stocks, because you get audited earnings, you get some investor meetings. So right now we're in a slow season. We're heading into hopefully another bull market here coming up pretty soon, and then another slow season, and hopefully another bull market. That's just my plan. Doesn't mean I'm going to be right. This is just me making a plan. Now, for these investor conferences coming up, because they're so important, I'm going to keep talking about them. We're just about in September. I'm probably going to be talking about these fall investor conferences all through September, just getting people geared up for them. I do have an article convincing investors to become shareholders. It is on my Substack. It is for free. I will post it down below in the pinned comment after I'm done recording this live stream. Basically, it's what I'm looking for in a company, in a stock at these fall investing conferences, where I think some of these stocks can get noticed. And right now, it's already starting. So this is Planet Microcap Toronto. They're already starting to put out a list of some of their attendees. And I've already gone through every company that on their list that they have released to us in the public. I already also on my Patreon, Discord, and Substack have a surprise pick from this list already. Eventually that's going to be released to the public, but right now that's only for my paying subscribers. But I've already gone through at least initial research for every one of the stocks that will be attending Planet Microcap Toronto. I think there's so much great opportunity there. I think some of these companies are really going to get some attention, be able to talk to investors and attract some people here, right? So this is what I was talking about with these fall investing conferences. I will put out free Substack articles profiling every single stock attending. And in that, I'm hoping people can go through there, give a quick read instead of doing all this research by themselves, and kind of pick out which stocks they think they want to devote more of their time and more of their research to. So I'm going to still be putting out those free articles for everybody, as well as in Vegas, I put out a top 5, a top 10, and then a underdogs and honorable mention to my paying subscribers, right? So I've got that, and then I've got this surprise pick for Planet Microcap Toronto. You could check all that out at www.commonsenseinvesting.ca. Now, I'm going to talk about earnings. I see people are already asking about some companies here. So I'll put that on the list to talk about as soon as my presentation is done. I'm going to talk about a few companies' earnings because I have to remind you, not a financial advisor. I mean this. I don't know anything about you, your experience level, your risk tolerance, how much capital you're working with. This is not a solicitation to buy, sell, or hold any of these stocks. I'm a YouTube channel. I'm just talking about these companies, giving some random opinion, but mostly this is here for entertainment purposes, and this is how I invest, not how to invest. So please go do your own research. Talk about this a lot, right? This was actually a Ryan Telford slide about return drivers for 10x stocks, talking about sales growth, profit margin growth, multiple expansion, and how important these are to get a winning stock in microcaps. And I've been starting to expand on that a little bit, giving some clarification, you know, asking some questions for education of microcap investors. Like, it's easy to say, oh, I want a company with sales growth. I want the perfect company. I want a perfect company with sales growth, massive profit margin growth. I want it to be completely undiscovered. Nobody knows about it, and it's going to get multiple expansion. And that's what everybody's looking for this right now. It's harder said than done. You know, some companies right now, their sales growth is a little bit wobbly. Other companies, you know, you really got to dig into earnings and see what's going on. Artificial intelligence isn't quite doing this properly yet, I hate to tell you. AI is great for research, but as far as like interpreting inflection points and how profitable a company is, how the quality of their revenue, the quality of the money that they're collecting is really hard to do unless you do it manually. And then, of course, multiple expansion, which is getting more eyeballs on the stock. But we're in earnings season, and this is kind of the 3 things that I'm looking for in these stocks. And they don't have to be perfect. I'm just trying to fill as much of this pie as I can get, right? It's hard not to constantly talk about Zoom Technologies right now. And, you know, I said, and this is becoming more and more evident, you know, if you go back in the history of time for Zoom Technologies, you know, they were all the way back down to 8 cents Canadian, 8 cents Canadian per share for Zoomed. You know, they're up above 2 right now. And there was chances to buy Zoomed at 16 cents and 40 cents and 56 cents and 75 cents. And people all along the way, $1 would have made money on Zoomed. I still think one of the absolute best purchases I've seen this year was after their recent earnings. There was risk heading into earnings. We didn't know what earnings were going to look like. They released earnings, share price rocketed up, share price rocketed all the way back down. This was at like $1.85 Canadian share price. It went all the way down to, I think, $1.62 here at the bottom, and some lucky buggers were buying shares there. And then ever since this purchase right here, share price has done nothing but go up. I think this was such a perfect buy, de-risked company because earnings were already released, getting Zoomed at a really nice share price. And then because of these earnings, share price just takes off. So I have to keep bringing this up because, you know, so many investors I've seen over the years always tell me when I'm covering these microcap stocks, Cameron, I missed out. I had a chance to buy, I didn't buy. I should have bought it this price. I should have bought it 10 cents. Now it's 20 cents. Oh, I should have bought it 20 cents. Now it's 40 cents. When you get these good companies crushing it, like how Zoomed is crushing it, everybody who purchases all along the way, right here, right here, and right here, and right here, and right here, and right here, have all made money all the way up this line, right? So make sure you look at Zoom sometimes when you're thinking to yourself, I missed it. Why share price has been going up? It's actually getting traded a little bit lately, but it's amazing that somebody, probably traders, sold shares on earnings day for $1.62 Canadian. And right now we have institutions literally fighting over shares of Zoomed. This was today. This was August 25th. These are true crosses for Zoomed. $36,000, $15,000, $15,000, $12,000 cross trades for Zoom Technologies. These were trades today that were over $10,000, which is the smallest one here being $13,000 and the largest one being all the way up to $77,000. Virtue ITG bought $210,000 approximately worth of Zoom shares today. It's absolutely incredible to see. Is this discovery? Is this finally getting the multiple expansion that Ryan Telford is talking about that Zoomed hasn't gotten yet, because Zoomed has shown such high growth that they haven't, despite share price going up, their growth in revenue and earnings per EPS is so high. They have such a small peg, you can't even see it. And, it's so high that basically they've had no multiple expansion. So is Zoom finally getting some discovery? Is Zoom finally getting some multiple expansion? We will see. Now, the interesting thing for me is earnings season. I love an earnings season to have comparables. And when your comparable stocks are both making you tons of money, I mean, what's more fun than that? It really has been a race for me between NTG Clarity Networks and Zoomed. Zoom started out at 8 cents. NTG Clarity Network started out at 15 cents. NTG Clarity was the highest first. It went to something like $2.85 at one point. It's come down since then. Zoomed hasn't had those peaks, but it's been steadily growing. It started off lower at 8 cents, and it is now ahead of NTG Clarity Networks. Now, the time to change that, potentially, NTG Clarity Networks is going to release earnings after the market close on Wednesday, with an earnings call to follow on Thursday. So we shall see. I was kind of hoping, I don't need earnings. I don't expect or need earnings of NTG Clarity Networks to be crushing it. I don't expect or need NTG Clarity Networks earnings to be as good as Zoomed. Zoom's earnings were absolutely incredible. I just need NTG to deliver on target earnings that are just good enough, that are okay, and gets everybody back on the thesis of what NTG is. I think if they can do that, I think we could bounce back up, maybe somewhere in here, 240, 245. That would be a win, in my opinion, for NTG Clarity Networks. They've been stuck here at around 206, 208, 210 Canadian recently, and Zoomed in this horse race right now is taking the lead, and that is absolutely fantastic. One of the things with NTG Clarity Networks, you look for patterns in some of these stocks. With earnings, with NTG, we've got earnings released here, right? Share price actually declined a little bit before it took off. We have earnings here, right? Share price actually declined a little bit before it took off. You kind of get this consistent pattern showing up. What's this consistent pattern of share price trending down? That's their financings, right? So you get these earnings where share price trickles down a bit after earnings until people realize how strong the earnings were. Maybe they release a press release of a new contract, whatever it is, and we get this strength to the upside with NTG. And then they do a financing and it comes down. They're already done their financing. They're not going to do another financing this year. That's for bloody sure. At least I really don't expect them to. It would be shocking to me if they did. But one thing I'm noticing right now, you see this blue box that I highlighted, or at least what we're hoping for, is you see the same pattern to what we had here in 2024. is share price kind of shot up to the moon. They had a financing, share price trickled down. We had earnings, and the earnings were enough of a catalyst, not a major catalyst, not a Zoom catalyst where, you know, it's going straight to the moon so quickly, but just enough of a catalyst to kind of recover the share price. We're seeing the same pattern here. Financing, share price down. We get this consolidation period. We had the same consolidation period over here. And now the hope is we've got earnings coming up. The hope is it's going to have the same pattern as this right here, where they release earnings. Earnings are just good enough that we don't get a moonshot, but we get some recovery in the share price. That's what I'm hoping for, right? The other thing I'd like to say is that I introduce a lot of new stocks all the time. I'm always looking for new stocks. You know, the microcap stocks tend to be a bit cyclical, right? It's very rare that you end up holding one for 2 years, 3 years, 4 years, 5 years. Something always changes, like what Ian Castle was talking about, and you end up selling or trimming a stock and you're left with cash. So you're always looking for that next best stock to take that position. But sometimes it's also interesting. I think 2025 has been the year of coming back, circling back to the already winners, to the companies that have already been winning. You know, I would suggest that some of the best stocks of 2025 have still been the best stocks of 2024, continuing their run. At least, hopefully, they continue their run, right? If you look at how Zoomed has performed in 2025, you know, slightly used, but in good condition. Everybody thought maybe they were running out of steam. That did not happen. They're absolutely crushing it, right? NTG has seen a little bit of a decline lately. Hopefully they can get a bit of recovery. But again, as far as one of the better stocks for 2025, absolutely. So slightly used, but still in good condition. What else we got here? Another horse race. I just compared Zoomed and NTG. You know, another comparison I've had recently was BioRem versus Covalon. Again, similar share price. They both got similarly beat up by Donald Trump, right? Like this, for Covalon, this was basically the election in the US where they started going straight down. And BioRem lasted a little while longer, at least until Trump's inauguration. And that's when share price started going down. So you see these similarities, at least in their stock chart. Slow and steady growth. People are discovering this company, discovering the stock, getting excited. Share price is going up. Donald Trump crushes that. We hit this bottom, you know, roughly in April and May for both stocks. And now they're trying to dig themselves out of this hole. And it's interesting in comparing these stocks because one of the deviations they took recently is Covalon Technologies went up before earnings. People got excited about earnings. Their share price went all the way from like 240 to like 285 or something like that Canadian. And then when they released earnings, share price dropped. BioRem did the opposite. Ahead of earnings, which were right here basically today, share price was dropping ahead of earnings. And then once earnings were released, that's when share price went up. So this is another time it's interesting for me to watch. There's always investors out there that say somebody must know something. Right? You see this share price going up before earnings, somebody must know something. You see share price going down before earnings, somebody must know something. And at least in this case, with these two stocks right now in Q2 earnings season, nobody knew anything. Right? You know, Covalon, people were expecting great things. They had a weak quarter, share price went down. BioRem, people weren't sure what to expect. Share price was going down. They had a really nice earnings, right? So people don't know, they are just speculating. That's what I want to say about that. Now, looking at these two again, this is BioRem, really nice. And again, I didn't need Rockstar. I didn't need Zoomed. I didn't need D-Box type quality earnings. I just needed improvement from BioRem. they did that, right? $9.4 million of revenue, 4 cents EPS. They've had higher quarters. They've also had much lower quarters. This was not the best. It was just okay. And there's nothing wrong with that. They still have some cash. They still have a significant backlog. And it's right now, despite being up, I think 12 or 13% today, still only a $35.7 million market cap. So basically one-time sales, plus they have cash, plus they have a $60 million backlog. That's pretty impressive. It's interesting, again, once I do this comparison to Covalon, right? Covalon, 35.7 million market cap for BioRem. Covalon is a $66.7 million market cap. Revenue here, 9.4 million, revenue of 8.37 million. I should check. I'm not even sure if this is in US, but that's not the point. This could be in USD. I forget if Covalon reports in Canadian or USD. BioRem's definitely CAD, but basically similar, right? 9.4 to 8.37, 4 cents per share EPS for BioRem. EPS for Covalon, not exactly super great either way. Covalon was beat by BioRem here. Covalon was beat by BioRem here. And yet BioRem is $35.7 million market cap. Covalon is 66.7. So it's an interesting comparison for two companies that have a similar share price, but that seems to be about where the comparison ends. BioRem definitely with the win on this one, right? I'm always looking for trends, trending up. And this is good news. I see this with BioRem. It's been trending up consistently, right? It's been making shareholders money consistently. It's done that very well recently. Because of these challenges, Donald Trump basically killed this. We can call this Trump Mountain right here. Share price had come back down to this $2 level recently because of it, consolidated for a while. And now I'm pretty excited that they've got this little pop right here. They've had some pretty decent earnings. Really happy right now with BioRem. I thought they had a really good earnings season there. When you compare that to Covalon, I'm struggling here, right? You don't get that consistent making shareholders money. It's kind of all over the place. In fact, back here we had shareholders basically equal to when they were back here in 2020. And then right now we've got shareholders basically equal to here back in 2021. So shareholders haven't been making as much money. This hasn't been as consistent. And if you look at this trend line, if I'm always looking for trends, I would suggest this trend line is flat. And then given their earnings, I don't really necessarily see a reason for this to go up significantly unless they're going to surprise us with some kind of press release, right? So the trend is our friend. And right now, BioRem, I like it. It's trending in good directions. Covalon, like the company, don't get me wrong, still like the company, but definitely not trending in the best directions right now. So if this is a horse race, I love these comparisons. If this is a horse race, Zoomed versus NTG, right now Zoomed is winning. NTG has a chance to have a really nice Q2. NTG will also, their Q3 and Q4 are expected typically seasonally. That's their better quarters. So NTG is ramping up. Zoomed already ramped up. I have to put Zoomed a little bit ahead right now as far as BioRem versus Covalon. I think that's a pretty clear winner, right? It's not neck and neck. Seems like BioRem is outpacing Covalon for me right now. Finally, TrueBar. And it's been interesting. All I've been asking for recently is just some stocks to get okay earnings, right? That's all I wanted. I feel like BioRem did that today, just okay earnings. We were getting two different types of companies. We were getting these absolutely sensational quarters from like Zoomed and D-Box. Share price ran up like crazy. Everybody got excited. And, better than expected, very strong. And I almost thought that, instead of getting that boring summer like I expected, it was just going to be a money-making summer. And then we had a whole bunch of other companies report earnings, Kraken, Gatekeeper, Snip Interactive, all ad techs not named Zoomed. I mean, I could list out a dozen companies that, earnings were not great. I've been saying that the theme for this year has been, spending more to make less, or making less and spending, the same. One way or another, companies seem to have found a way to not have very good margins in Q2, whether that's higher expenses, OPEX, CAPEX, whatever it is, COGS, companies' expenses have been going up and their revenue hasn't been going up as high. So all I've really wanted from companies is okay earnings. They don't have to be perfect. TrueBar, yeah, okay. It's maybe okay. They were guiding for 18.7 million, I believe. They got 17.7 million. At the same time, they did, despite getting a little bit less revenue than expected this quarter, they did reaffirm their full year 2025 guidance for net revenue, 65 to 70 million. So a little bit of a miss on the revenue side, but they did reaffirm guidance. For me, though, the bigger miss, again, I think this is the second quarter in a row, is, a little bit on the margins here again. And I know they're preparing TrueBar for a sale. They don't care about the margins. They want to ramp up the revenue really quickly, and they're doing that. This is for the 6 month ended. This isn't just for this quarter. Net revenue here, 42% gains. That's absolutely fantastic. Unfortunately, their COGS are up 56%, 12% change in gross profit. So at the end of the day, is it good? Is it bad? I'm curious to see what investors think. I'm curious to see what happens to share price tomorrow, because the company is significantly improving. They are. TrueBar is improving significantly. They're going from these lower single-digit revenues, 11, 12. They finally get 17.68 million. This is absolutely fantastic growth from the company. Bottom line isn't as pretty. Are people going to focus on the top line? Are people going to focus on the improvement that this company has been delivering and share price goes up? Or are they going to focus on the bottom line miss and, missing their guidance this quarter by around $1 million, right? Doing okay, but missing guidance by $1 million. What are people going to focus on? And then finally, last stock, I promise, this one's a little bit of out of the blue park, just come up before this live stream, but Grey Wolf Animal Health. This company, $1.25 Canadian, up 13% today on earnings for Grey Wolf Animal Health. That is Wolf V right here. And you can see they were kind of consolidating for quite a while. We've got a bench up, we got some consolidation, and then here on earnings, it looks like we might have another bench up. We will see if it holds. And this guy right here actually made a video on them not too long ago. This was February 28th, 2024. I introduced Grey Wolf Animal Health, Profitable Penny Stocks 2024. The theme of this Profitable Penny Stocks video series was that, again, to simplify microcap investing, if you can find good companies, good management teams, profitable and growing, doesn't have to be like Zoom, doesn't have to be 232% growing. It can be 10% growing. If you can find those companies and you have the patience to hold them for a while, they typically turn out pretty good. This is another great example of that with Grey Wolf Animal Health, because this was February 28th, 2024. This was somewhere right in here when I made this video, and they did a whole lot of nothing right up to about August of 2024, and now they're starting to see significant improvement in share price. So congratulations to Grey Wolf Animal Health. Congratulations to me for making a video on them. This is their quarter here. You look at some of their numbers, revenue up 32.3%, gross profit up 40%, adjusted EBITDA up 56.8%. So remember back in that slide I showed you right at the beginning, what are we looking for, right? Sales growth, they got that. And then we want gross profit, or sorry, margin expansion, and that will lead to multiple expansion. So right now, check, and then if this company gets discovered, we'll see some multiple expansion. Really nice, trending, solid, strong look here from Grey Wolf Animal Health. And this is one of my favorite thumbnails of all time. Absolutely love this thumbnail. It'd look better without me in it, but I did love that wolf. So that's about it. That's everything I had to talk about today. What do you think? What was your favorite earnings company this earnings season, right? I see there's questions here about a bunch of different companies. Intermap, Atlas. It's time for questions, time for answers. Let's chat about some stocks. If you just wanted to watch the presentation, you're on your way out the door. Don't forget to like, subscribe, comment, whatever you want to do, or not. It's up to you. It's I don't need too many views. Sometimes I'm happy with what I've got, believe it or not. So let's see here. Questions and answers. 35 minutes into this live stream. Hello, great to hear you. Made some research about FTG, Foran Technology Group. I quite like it. Your thoughts? Yeah, I mean, it's hard not to like FTG. I'll bring them up on the screen, right? So we were talking about this the other day. FTG for me personally, like I'm not going to sit here and say it's necessarily my favorite. And the reason is that I'm a microcap investor. But I say that, but you know, Ian Castle jokes around too that for microcap investors, a microcap is usually around $20 million, not $50 million. FTG is $292 million. It's a little bit large for this guy. It's already got some discovery. It's gone through a lot of the discovery process, so that multiple expansion is already a little bit gone in my opinion, right? I showed you that slide. We're looking for sales growth. We're looking for margin expansion. If we can get those two things, then we're looking for multiple expansion. FTG's already had some multiple expansion, right? But I mean, it's hard to bet against such a winning stock. Consistently up, 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 up. I do like NTG. I like their growth profile for the future. I believe they're expanding to India, right? And the main thing that I love about FTG here is their share price isn't just multiple expansion, people discovering the stock. It isn't based on hype or too much future potential. It's backed up by earnings. I mean, this is the trailing 12-month, the revenues in white. The red is their operating income. The green is their cash from operating activities. Strong, solid growth across the board for FTG. So, you know, I'm not going to sit here and say I don't like FTG. I think they have, you know, huge potential in the future. Really like the company. I mean, for me, my only thing is they're a little bit too large, right? I'm typically looking for about 10 to 50 million. And they're already just about at $300 million market cap. So great company, though. Yeah, I took a look at Hydrate Technologies' nurse earnings. They did good, didn't they? I mean, here's the thing with Hydrate. I'll pull them up. Let's talk about Hydrate. This should be fun because this is a bit of a controversial stock, right? People either love this company or they hate it. Here's the thing with Hydrate that people seem to forget is that when I look at their earnings right here, let's bring it up. First, this is a really nice company, right? This is a really nice company. They're growing. I wish they have a table here. Don't they have a table here somewhere? I think they do. This is a terrible table. My gosh, Hydrate, you need to do a better job. I'll go back up here, right? I think I summarized this on my Discord. But at the end of the day, one of the things that people forget about Hydrate is they're growing and they're now profitable. This quarter showed profitability, right? They had a little bit of a net income somewhere in here. Adjusted EBITDA of $182,000 for Q2 of 2025. GAAP revenue, 6 months top line revenue, gross margin is up. GAAP net income of $50,000 from a GAAP net loss of $27,000. So you have a company that's growing, you know, right here, depending on the numbers you look at, 31%, 33%, 33%. You have a company that's growing in the 30th percentile here, you know, 30-some percent, and they're doing it at a net income. So they're growing and profitable. They have some cash, and they're talking about more growth in the future. This is a really, really, really nice stock. This is really, really, really nice earnings. I think Hydrate Nurse did a great job, and I think these are some fantastic Q2 earnings. I think the only problem people have is their expectations. You know, I talked about, what was it there? TrueBar giving us guidance, missing guidance by $1 million, is that going to hurt the stock or not? I can almost guarantee you if they didn't give us guidance and people were looking at the growth of TrueBar, they would be like, wow, I'm so impressed. This is a wonderful company. But because they gave us guidance and they missed it by $1 million, I guarantee there's going to be people out there that are disappointed with TrueBar. It's kind of similar with Hydrate, with Nurse. People have such high expectations of this company that I think this growth is going to somewhat disappoint some people, right? When we head back to this share price, they had what, $5 million of revenue or something like that. Market cap's already at $142 million. So for a Canadian microcap stock, I'm not going to sit here and say it's overpriced. I'm going to sit here and say that people have high expectations for the future, right? I don't think these recent earnings are in here, but you've got a $142 million market cap company with around $17 million of revenue. That's because I'm hearing that 77% growth number. I'm hearing 100% growth. I'm hearing 100% growth sequentially for the next 4 quarters, right? People have these huge expectations for Hydrate. They have these huge expectations for Nurse. And that's fine. You're allowed to have whatever expectations you want to have. What I would like to say on this company is that as far as financial fundamentals, I thought they did a great job. I thought they had a solid quarter. Is it going to maybe disappoint some people? Probably. Are people going to talk about how they're not disappointed because they still expect massive 1,000% growth in the next year? That's great. At the end of the day, if Hydrate keeps doing what they're doing, 30% growth, doing it profitably, hitting that inflection point to net income, showing that they could scale with net income, I mean, that alone for me is pretty impressive. So that's my thoughts on Nurse, is that I feel like underneath all the hype, and there's a lot of hype, underneath all the hype, there's a pretty good little company under there, right? It's just a matter of how excited you get. Hello. Any catalysts coming for Intermap this quarter? I don't know. I think so. They tend to, when they release PRs, when they release news, Intermap, I've never known ahead of time. I do. I don't know. It's one of those companies where, again, I'll pull this one up so we could talk about it, right? Because it's speculation more than anything. Now, I do love Intermap, but we got to talk about it, right? So this is another one here, right? Intermap's got a $182 million market cap. They have guidance for what? What's their guidance for? 30 to 35 million of revenue this year against a $182 million market cap. So the question is, do they have any catalysts coming up? I hope so, right? This is a fairly high share price for a company like this. Now they're showing, it's similar to Hydrate, is they're showing there is a good little company under here. They're growing. I believe they're profitable. They're growing and profitable. They're doing a good job. There's a good little company under here. It's just that people have such high expectations for them. They need these catalysts. They need these next drivers to kind of, get them up to valuation. The multiple expansion, the discovery has already partially occurred with a company like Intermap. So when they release, what happens, and what I wanted to talk about with these types of companies is I don't monitor them very closely. I mean, when they have a $182 million market cap, do I really care if they get $32 million of revenue or $33 million of revenue? Is that going to change or break my thesis? Absolutely not. Basically, if I'm looking at a stock like Intermap, I have a long-term investing thesis. If I'm paying $182 million market cap for a stock and it's only making, this year, if they're lucky, $35 million of revenue, my thesis for this company, for this stock, is at least a 5-year plan. I just talked about planning, make a plan. A lot of companies I have a 3-month plan for, a 6-month plan for, or a 12-month plan for. With a company like Intermap, based on these types of valuations, with a company like Hydrate, based on that type of valuation, a 2-year plan at a minimum. Preferably a 3-year plan, maybe a 5-year plan is probably what's needed. So because of that, I don't monitor a stock like Intermap as much as I do other companies. This is the type of company, if you own shares, it is almost like a coffee can stock, or at least a longer term plan for me. What's my feelings on DRX ADF Group? Oh boy, this one's going to get me probably in trouble. Um, I'd like to pull up the chart. I'm not going to pull up the chart. There's a few things here. ADF Group right now, there's the 1 year, there's the 5 year. And when you look at that, if I pulled up my technical analysis chart, it would show it better, but I don't want to on a live stream. This is gorgeous though, right? You get this low point right here in April. You get this move up, a peak, a move down, some consolidation, peak up, move down, consolidation, peak up, move down, consolidation. Again, I said we're looking for trends. We're looking for patterns. That's gorgeous, is it not? Right? What do you think is going to happen next? It's either two things. I mean, technical analysis is just setting a stock up for success, or failure. It's still up to the stock to deliver on that success or failure. It's set up right now where if the next news is positive news, if we get an upward catalyst, it looks to me like it's in a very good spot. If we get a negative catalyst, well, you know, we've seen this before, right? So that's my thought right now on ADF Group. It's really at balls in their court. What you going to do? Positive news or negative news? Because it's set up. It's teed up. It's teed up for you right now. Now, as far as what's going to happen, positive or negative, I mean, your guess is as good as mine. They've had so much problem. They had that huge contract in Quebec. I would like to see more of that buy Canadian approach where they win more Canadian contracts as a Canadian company, obviously. But that's never going to replace their American contracts, their American growth. So we need to make friends. The more Canada makes friends with the US, the more things return back to quote unquote normal, the more bullish I am long-term for ADF Group right now, because there's still so much volatility. The USMCA, the CUSMA, free trade agreement between Canada, the US, and Mexico is basically up for some renegotiations and discussions. There's some conflict there as to whether it can be torn apart or canceled or renegotiated fully. But one way or another, the free trade agreement is going to be discussed in 2026, and that brings some added volatility. If that thing goes away, we'll see. The other thing with ADF Group, I think we're about 170 days into steel tariffs. Steel tariffs started here at around 25%. Steel tariffs then got increased around here to 50%, so they got doubled there. They've been 50% this entire time. I think that's about 170 days, 180 days, somewhere in there. Don't quote me, but getting close to that amount. And the last steel tariffs lasted 350 days. So if this steel tariff is going to last the same amount of time as the last steel tariff in, when was that? 2019, I believe. Then we're a little over halfway through, or around halfway through. So these steel tariffs may not be going away as quickly as we hope. So I like the company. It's just, man, for such a boring company, there's a lot of volatility there and a lot of things that could go wrong. But in saying that, like, man, I showed you the chart, and that chart is, if that was a stock that I knew had a catalyst tomorrow and that catalyst was going to be good, that's a nice chart setup, right? Have you done any research into Burcon NutraScience? BU? If so, what are your thoughts on this company? Nope, never heard of it, never looked at it, sorry. NutraScience, if it's like a biotech, it's probably not my type of company. So at this point, I could take a quick look and just see if the ticker's right here. Let's see here. Is that a Burcon NutraScience Corporation? Let's take a look at this one. So 1 year chart, and kind of flat. People got excited, and now it's down again. 5 year chart, not looking too pretty. When I get charts that look like this, I very much ask, well, what's the bull case here? Because it hasn't ever really made shareholders money in the past. So I'm a skeptical, grumpy old man. Like, if it hasn't made people money in the past, my question is, why would it make money for me in the future, right? And so that's a big thing that I always look at with charts. It's amazing how scared, I'll show people after this, but it's amazing how scared people are of successful companies oh, I missed out. Oh, I missed out on the first 100% gains. And they don't want to buy those successful companies, but they're willing to buy these beat up ones that have never made people any money. So provides plant-based proteins for the food and beverage industry in Canada. I might have heard of this one before. I think they're providing a new type of plant-based protein. Vegans are pretty excited about this one if it's the company I'm thinking about. So they might have a new product that's getting commercialized soon. I don't know. I would need to look into that. It's not quite pre-revenue, but it's pretty close, right? So they would very much need to convince me with the EPS worsening and the share price just constantly going down year after year after year. I would need to be highly convinced that they have product market fit. And typically, look, again, absolutely not financial advice, but typically what most people in microcap say is, why don't you wait a while, right? It's such high risk right now. It's not making any revenue, declining earnings per share. Why don't you wait until they're close to profitability? Why don't you wait until they're close to getting some kind of EBIT number here that isn't negative 22 million? Some of these companies, this is such high risk for me, right? When you get these types of expenses, 7.5 million of total expenses on $273,000 of research, I'm probably never going to buy a stock like this ever, right? The risk is simply too high. I don't really care what the product market fit is. If they have a good product, they could prove it to me by selling it, making revenue, and proving they can do it profitably, like Hydrate just did, right? Like BioRem just did, right? Let's see here. Pine Tree Capital. So Pine Tree Capital is basically a holding company for, can I bring it up here? I could bring up the US ticker. So there we go. There's Pine Tree Capital. Are they up significantly? Yeah, they're pretty much up significantly. So the CEO of Pine Tree Capital just invests in other companies. And where is it here? Damian Leonard. So Leonard's our Constellation Software. Mark Leonard is the CEO of Constellation Software. People have argued that, Mark Leonard is basically the most intelligent, the most like the Michael Jordan of the M&A, basically, is what Mark Leonard is. I believe Damian is his son. And so you have this, I mean, this is like when any Jordan steps on a basketball court, right? There's some intimidation factor here. They get a little bit of a boost up. Damian Leonard, just basically being the son of Mark Leonard, gets a lot of eyeballs on the stock. He basically invests in other companies, and this is a holding company. It's a venture capital and private equity firm specializing in early, later stage venture, middle market, mature, late, all these things that they invest in. Here's the problem. My ego has a lot of trouble with this, with a stock like this. I'm not saying it's a good stock or bad stock or buy it or don't buy it. Absolutely. My ego has trouble with this because when I buy shares of Pine Tree Capital, and I don't, I'm not a shareholder, but if I did, I would be saying that Mr. Damian Leonard is a better investor than I am. And that's tough to say, right? Like, I'm very competitive. I am. I know I try to be nice and I am, I'm friendly and I'm kind of this YouTube person that's on here smiling all the time. I'm highly competitive, not necessarily against other people sometimes, so much as with myself even, right? And to go buy a stock and say, here, Mr. Damian Leonard, I am giving you money to invest, is basically in my mind saying that I can't beat you, so I'm going to give you my money so I can at least catch up a little bit. So look, I'm sure he's a fantastic guy. This is obviously a fantastic stock. I mean, it's been up in the past year. It's up just about 100%. It's just about doubled people's money. Absolute congratulations. But for me, I do struggle with giving somebody else my money to invest. But I mean, it's a great way to have somebody else do the work for you, and they can invest in companies that we can't invest in because they're investing in private equity. So when you look at a stock like that, you have to do your research on the management team. That's what you're looking at. Can that management team make better investment choices than you? And do you have enough conviction in that management team to give them a chance to do it? Because it's not going to help you if you don't trust them and you trade in, trade out, and you lose money on trading fees. It's probably not going to work. So, look at the management team, make sure that you're confident enough to go with them. I think I heard about it on Small Cap Discoveries. They make plant protein. Yeah, that's that Burka Nutriscience. Look, that's the thing. People have biases, right? I mean, if I was a hardcore vegan right now, I might look at that Burka Nutriscience or whatever it is, making this new plant-based protein that's better than all the other plant-based proteins out there, and I might see nothing but opportunity, right? I could see it as a product that is going to solve my problem. And when a stock can make that connection with an investor, you basically have like a fan for life, because you see the problem, you see the fix is right in front of you, and you can buy shares of that fix. And you think, well, how many other people out there are like me that are looking for that same fix? That is an okay plan for some people, but it's a bit speculative, right? It's a fix for you, but we don't know if it's a fix for enough millions of other people out there to get them to profitability. We don't know if the management team knows how to scale a company so they can get sales growth and profitability. So typically for me, this is, again, I only cover one pre-revenue stock per year. That's another company. We might as well call it pre-revenue. They're making $236,000 or something like that. I only got so much room. If it's a good company, they'll prove they're a good company. They'll get product market fit. They'll get high sales growth. They'll get close to a break-even point in profitability. That's when I would have significant interest. Just catching up, you're talking about ADF Group on my end. I've noticed a lot of construction companies have had a pullback like Symmetrix and Berg Construction. Any thoughts? Well, Symmetrix had a good quarter. I mean, the hard part with these construction companies is not only are they cyclical, they're cyclical in their niche, and they're cyclical potentially in their geographic location. Like, for example, Symmetrix has been having a terrible past 12 months because they're a Canadian company operating in the United States, and the U.S. basically delayed a lot of their projects because of the U.S. election. And then they delayed the projects some more because of tariffs and trade issue uncertainties and economic uncertainties. People were saying that tariffs were going to crush the U.S. economy, so the U.S. put all this stuff on hold. Now some Matrix contracts are starting to open up. So we could look at some Matrix and say the future is bright. It's tough to apply that to all the different construction companies. You almost need to look individually at what they do. Are you as bullish on the housing industry as you are in Symmetrix and their, cellular concrete? It's a completely different end client that they're selling to. It's almost a different sector, even though it's both construction, right? So I think it's tough to just talk about it in a live stream. You'd almost have to look at each company individually. I haven't looked at Bird Construction because, again, I love Bird Construction, but it's too large for my channel. It's too large for me. I've been watching Symmetrix and I've been watching ADF Group. That was an amazing answer on BurCon, especially considering that you did it on the fly. You taught me a lot in that 1 minute. Thank you. You're welcome. No problem, right? Look, investing in microcaps. I did a podcast today with David from Value Bridge, and that podcast will get released eventually. He'll let me know when. But it's great because it brings me back to a lot of like the investing principles. And there's so many of these speculative stocks out there. There's so many great stories out there, and you can get attached to those stories. And if you want to have fun with one or two of those stories with a small bit of money, that's no problem, right? We all got to have a little bit of fun. I do some trading every once in a while, even though I'm not a trader. Just keeps me interested, keeps me excited. If I'm a fan of a company, there's no reason I can't buy a tiny little piece of that company and watch it grow. Buy a little tracking position, see what happens. Money that you can afford to lose, buy a tiny little piece and watch it for a year. Watch it for 2 years, see what happens. But like if I'm going to commit large parts of my money, if I'm going to make a company earn my money, large portions of my money, they do need to earn it. Right? And you don't earn it by saying you've got a wonderful product. You earn my money by proving you have a wonderful product. I need evidence, not words, right? So, that's harsh on some of these companies out there, but That's the way it is for me. I heard they have a tax loss advantage. That could be good. I had CR. Not sure what CR is. Last chance for questions. We are what? 59 minutes in. We're basically at an hour. That's everything on here. I'm not sure what CR is or what company had tax problems, but that's pretty much the end of my presentation. Earnings coming up. Atlas Engineered Products earnings are coming up. I forget when. I think is it Thursday this week. NTG is coming up Wednesday after close. What else do we got coming up here for earnings? I didn't even look ahead of this live stream. I looked this morning, but I didn't double check that. Let's see. What does my app say for earnings? And I'll give everybody a chance to ask any last minute questions while this thing is loading up. TrueBar, we got TrueBar. Legend Power Systems, they had a terrible earnings. Oh my gosh. Sabio Holdings is releasing earnings. Avant Core, which nobody likes but me, is releasing earnings. NTG Clarity Networks, Now Vertical Group, Tribe Property Technologies, which is another stock nobody seems to like but me. And that's about it. So still a bit busy earnings season, but it's just about over. Pretty much one more week, and I think that will be it. So let's see here. Thanks, Cameron, for a good presentation. It's been great. Beware and Hash earnings. Right. How could I forget about Hash? Hash earnings interest me. Beware, they just need okay earnings, but I would be interested to see Simply Solventless earnings. They need to show cash flow. Sabio earnings prediction. I don't have a prediction, just show improvement. Sabio earnings released a debenture recently, a high-risk debenture to pay off a high-risk debenture. I don't like it, but I understand it. And I actually, share price, the debenture crashed share price down to 38 cents Canadian. I bought at 38 cents Canadian. It's amazing how a company will do something. A $2 million debenture doesn't change the investing thesis for me. So when a company releases a $2 million debenture and share price crashes 20%, that's typically a buy for this guy. So all I need from Sabio is okay earnings. Continue proving out the thesis of showing me your core company can grow. That's all I want. There we go. Thanks, Cameron. Thanks, Cameron. Looking forward to Name Silos earnings. Yeah, that would be a good one too. Glow Life Tech is coming up apparently. That'll be okay. Perfect. I'm done. Losing my voice. Thanks, everybody.